Well, Saregama is in focus on the back of its analyst meet. The management has given a revenue growth guidance of 25 to 26% over the next 3 years. Vamakshi is joining in with all the details. Vamakshi, over to you.
Well, absolutely. Like you rightly pointed out, revenue growth guidance X of Caravan of 25 to 26% is expected over the next 3 years. Music licensing is expected to log a 23% CAGR, and this would largely be driven by improvement in margins as well as on account of leadership and scale benefits. The growth in turn would be supported by an investment of nearly 1,000 crores that they would make over the next 3 years in the new music, and this investment will in turn ensure that the company stays relevant going forward. Even the old catalog continues to see steady growth of 10 to 12% with margins of around 75 to 80%. As far as the video segment is concerned, they said that that this segment is at a relatively nascent stage and is expected to clock a growth rate of almost 25 to 30% over the next 3 years. Margin improvement is also expected given a bigger library as well as scale, and in fact the company went ahead and said that over the next 12 to 18 months they're expecting margins at 8 to 10% from this particular segment. As far as Caravan is concerned, they say that the focus is now on generating higher margins as compared to revenue growth, with the elder generation now becoming accustomed to streaming. The life cycle of the product has now become limited. Overall, they believe that the PBT growth should be slower in the next 6 months as the company ramps up its content acquisition and integrates Pocket Aces. But after this, they're expecting the PBT growth to outpace the revenue growth. So given those factors, MK has maintained their estimates, retained a buy and given a target price of 580 per share.
Thank you very much for that. That's from the top RP, RP Sanjeev Goenka group companies. But let's talk about